Most people quit right before their money starts exploding, and they don't even realize how close they were. Never judge your future wealth by how slow your bank account is moving right now. The slowest part of the journey is secretly when the most important work is happening. Most people think going from $100,000 to $1 million is this brutal, never-ending climb. In reality, once you hit a few key wealth checkpoints, the game flips and your money starts working harder than you do. Today I'm going to walk you through the real math behind how 100K can turn into $1 million, why the first 100K feels miserable, why around 650K is where everything changes, and how regular people with normal jobs actually get there. By the end, you'll see that the path to millionaire is less about being a genius and more about surviving the boring part, from 0 to 100K. The brutal beginning. Let's start with the part nobody likes to talk about, the first phase from 0 to about 100,000. This is the phase where it feels like you're doing everything right and getting almost nothing back. Imagine you're investing $500 a month into a simple index fund, getting around 7% per year after inflation, roughly in line with long-term stock market returns. In year one, you've put in $6,000 of your own money, and your account might show something like $6,200. You did all that saving, and the market gave you about $200. That's when people say, what's the point? This is going nowhere. But stay with that same plan. After 10 years of investing $500 a month at around 7%, you've put in $60,000 of your own money, and your account is roughly in the high 80,000s. Now, the growth from the market isn't $200 a year anymore. It's tens of thousands stacked on top of what you put in. By around year 12, you've crossed roughly 100,000, and here's where the story quietly changes. Why the first 100K is so important. The first 100,000 is not just the hardest financially, it's the hardest mentally, and the numbers back that up. Saving a few $100s a month at a normal market return can easily take close to a decade just to hit that first six-figure mark. Why is it so hard? You're mostly building the habit, not the balance. Most of the growth is just your own contributions. Market gains are tiny at first, so it doesn't feel like compounding is doing anything. But at around $100,000, something flips in the background. At a 7% return, $100,000 throws off roughly $7,000 a year in growth without you lifting a finger. That's like getting a whole extra year of your $500 per month contributions, just from your money working for the first time. Your dollars are working almost as hard as you are. And here's the sneaky part. On a time basis, once you're at around 200 to 300K, you're already close to halfway to millionaire territory, even though the dollars don't look like it. By the time the portfolio hits around 300,000, you're roughly 50% of the way to $1 million in terms of years spent, even though you're only 30% of the way there in dollars. From 100K to 650K, the hidden acceleration. Now we step into the phase almost nobody prepares you for, the grind from 100,000 to about 650,000. This is where the snowball is rolling, but your brain still doesn't feel rich yet. Let's say you keep investing that same $500 a month, and your investments keep earning around 7 to 8% per year. No crazy meme stocks, no lottery tickets, just boring, broad market returns. Here's roughly what happens over time. Your first 100K might take you close to 10 to 12 years. The next 100K can show up in maybe 5 to 7 years instead of 10. After that, each extra 100K comes faster than the last because more and more of your growth is coming from compounding. By the time your portfolio reaches somewhere in the mid six figures, the math goes from cute to aggressive. At around 400,000, a 7 to 8% return is tens of thousands of dollars per year of pure growth. At 500,000, it's more like mid five figures every year. And remember, you're still investing monthly on top of that. This is what people mean when they say your money starts working harder than you. At $500K, you'd need to earn several $1,000s a month after tax just to match what your investments are doing in the background. The real inflection point, around $650,000. Here's the twist. The true everything changes moment isn't exactly 1 million. It's earlier, around 650,000. At roughly 650K invested, a 7% return is around mid-five figures a year in growth. An 8% return is even higher, basically a solid full-time income in many places. That's the point where your portfolio's yearly growth starts to look like a normal full-time income on its own. In a lot of cities, that's a solid middle-class salary coming just from the growth, not counting your job. This is the checkpoint where your net worth can jump by 5 figures in a year while you sleep. A bad month in the market can move your net worth more than your paycheck. Every percent of return is thousands of dollars either up or down. And even if you stop increasing your contributions, the math has taken over. Once you've built that base, the timeline to $1M is driven a lot more by compounding than by what you do month to month. From 1 million to 2 million, faster than 0 to 100K. Here's the part that really messes with your head. The jump from 1 million to 2 million is often faster than the journey from 0 to 100,000. Let's keep it simple. At $1 million, a 7% return is around $70,000 a year. An 8% return is about $80,000 a year. So even if you never added another dollar, that alone is a full-time income for a lot of people. If you keep working and you're still adding money every month, the climb to $2 million speeds up even more. Compare that to your start. In year one, your investments might have grown by $200. At $1 million, they can grow by more in 1 week than you used to grow in a whole year. This is why wealth feels unfair at the top. The rules didn't change. You just stayed in the game long enough to let the math do what it does. The problem, our brains hate this timeline. Now let's talk about the real enemy in this story. It's not the market, it's your brain. Your brain likes instant rewards, new phone, nicer car, eating out, visible progress, big jumps, quick wins. Stories where effort and reward are tightly linked. But compounding gives you years of boring, tiny gains at the start. The biggest rewards at the very end of the journey, a feeling that nothing is happening right before everything actually happens. On top of that, lifestyle creep attacks you the moment you get a raise. Instead of saving more, most people move to a bigger place, buy a nicer car, stack on subscriptions, and basically delete their investing margin. If you're always upgrading your lifestyle as fast as your income goes up, you never give compounding extra fuel to work with. So you get this messed up situation where the math is on your side, but your emotions are constantly trying to drag you out of the game early. The challenge, getting from I can't save to I'm building a snowball. Let's be real. Telling someone just invest $500 a month for 30 years is pointless if they feel like they can barely afford $50. So let's break the challenge into something more realistic. If you truly can't do $500 a month right now, fine. What can you do consistently without quitting after 2 months? Maybe it's $25 a month. Maybe it's $50. Maybe it's $100, even $50 a month at a normal market return over 30 years can grow into tens of thousands of dollars. That's not millionaire money, but it proves something critical. The habit works. And once you prove to yourself that you can invest a small amount, the next step is not trying to jump to $500 overnight. It's asking, how do I create room to scale this? That usually means attacking 3 areas. Big fixed costs, rent, car, loans, useless recurring payments, subscriptions, random apps, stuff you forgot, income, second job, side hustle, asking for a raise, selling unused stuff. You don't need a perfect budget. You just need to slowly widen the gap between what you earn and what you spend, and then push that gap into investments automatically. How automation saves you from yourself. Here's one of the smartest moves you can make. Never rely on willpower to invest. It will fail you. Instead, you set up automatic transfers from your checking to your investment account right after payday. Increase that amount every time your income goes up before you feel the raise. This does two things. It turns investing into the default and spending into the leftover. It removes hundreds of little, should I invest this month? Decisions that your tired brain will eventually say no to. Just by maintaining steady contributions and letting normal market returns do their thing, many people can go from $100K to $1M over a couple of decades. Automation keeps you from quitting right before the compounding curve steepens. The key moment, when you finally see the curve. There's a quiet moment that almost every long-term investor hits. You log into your account one day and realize the account went up more in the last year than you contributed. The market gave you more than your job did. Maybe that happens around 200K, maybe around 300K, maybe later. But once you see that, the entire game changes. You stop thinking, I'll never get to $1 million. You start thinking, if I just don't screw this up, the math will do the heavy lifting. From that point on, your main job is not to chase the highest return. It's to avoid blowing up, no crazy bets that can wipe you out. Keep contributions flowing, even if they're small. Let time and compounding do their thing. Why this is more achievable than it feels. If all of this sounds slow, that's because it is. But slow is not the same as impossible. With steady contributions and reasonable returns, turning 100K into $1 million in 20 to 30 years is absolutely realistic for a lot of normal people. That might be starting with 100K and adding a few hundred a month, or starting from zero and grinding your way up over decades. You don't have to. Time the market perfectly. Pick magic stocks. Be a millionaire by 30. You do have to stick with boring, diversified investing. Keep your lifestyle a step behind your income. Stay in the game long enough to let the curve bend in your favor. So when you look at someone with $1 or $2 million invested, it's easy to think they must have done something wild. But if you zoom out, the story is usually the same. A brutal first decade where nothing seemed to move. A middle phase where compounding quietly took over. An end game where the numbers finally matched the effort. The math from $100,000 to $1 million isn't magic. It's just time, consistency, and not quitting when the balance looks embarrassing. Are you thinking about converting your IRA into a physical gold or silver IRA? Click the link in the description to get your free copy of the Gold and Silver IRA Guide and discover the saving secret a growing number of Americans are using. If you have thoughts on today's topic or something you'd like me to dig deeper into, feel free to leave a comment. I always appreciate the conversation. And if you got value from this, tap like, subscribe to the channel, and hit the alert bell so you're here for the next breakdown. See you next time.